Pour over it and do some business with it. But just gives you an idea, guys. Just gives you an idea of what's happening. Nice rip on bonds. You might have been a buyer with me on that bottom edge at 16s. We started to see a big change in value, and it gave us a nice leg into the trade, didn't it? It gave us a nice leg into the trade. But if you took it, I like your style. We've just reached target price at the top edge. You'll see we didn't get bottom edges. We don't always get bottom edges, but obviously we've had a very, very nice development since the closing price here. You started to see the curve flattening. So we should be trying to buy bonds along a straight line. And obviously when you get a straight line, all I'm trying to do is bid 12s or 13s and see if I can get some. If we can get some 10s, of course, we'll be delighted. But chances are we're not going to get any 10s or 9s, aren't we? So we've got to try and do some business. And we've had a nice takeaway from that, guys, and obviously into the prior swing high for a walkaway trade. You can see that the spread is starting to widen out. The 10s, 5s, 10s is starting to diverge. And a nice trade to get away from that bit of business just there. And a very, very nice trade. 18s from a price there of 14s. That's another $1,000 for bond traders. Unfortunately, I never got a chance to tweet this one, but it is what it is. A nice outcome, guys, a nice outcome. Tomorrow, of course, is the big day, the 10-year bond auction. We'll get a good feel for bonds tomorrow. How much demand is there actually in this market? And we'll try and capture some of that trade. Now, one of the things you might have recognised in bonds, what is it you recognised? Anyone? On that buy on bonds that we were talking about, what did anybody? I know Reeve and Rennie were both trading bonds. What did you recognise in that bond, guys? I actually mentioned something similar about it this morning. Well, guys who's trading bonds, you must, because you would have seen it yourself. You would have seen it yourself. Anyone? Nobody? Okay, so what we would have seen would have been the 11.7 Voltic. I said this morning, anything over 3, anything over 2 is huge. Well, 11.7 is not just huge, it's unbelievably huge. So you can see that that huge, unbelievable buy trigger was already incredibly visible for anybody that can pay attention to that. And obviously, as you go up into the top edge, you can start to see that you know, a little Voltic reversal. Just coming in at a higher price, just booking some nice profits there, and that was the trade. See how obvious it is, guys, and yet nobody knew. I've got a question. Why don't you know about that huge Voltic reversal? Why is that not something that you look at and go, wow, that is out of place? That is crazy. Certainly caught my attention, that's for sure. Because you're not busy enough, you're not active enough, you're just sleeping at the wheel, hoping to see a trade and then get busy. You're not seeing and spotting these opportunities as they're setting up on the right-hand edge. It should have been incredibly obvious when you saw something in that kind of order, when normally the numbers are 1.0 or 2.0. This is 11.7. We actually, interestingly enough, for anybody coming in, I actually said, please on Mondays especially, pay attention to the size of the Voltics. The bigger the number, the bigger the activity. So obviously when you start, and I said anything above 2 is usually an interesting RGL. Anything above 3 is usually almost a given RGL, and anything like 11, well, it's just ridiculous, isn't it? It's just absolutely ridiculous. So, you know, when you see your Voltics coming in and they're coming in with those kind of numbers, if you don't pay attention to that, guys, you're giving away, well, you've just given away a $1,000 winner right there because you never paid attention to it. Crazy. Interesting enough, Paul, the Voltics on the bond market are actually more interesting for a very simple reason. They normally happen when a spreader trades with an outright trader. Because obviously if a spreader trades with an outright, they want to get as short as possible. They're not losing money, but they want to get as short as possible, and the outright trader wants to get as long as possible. And they basically just transact as much volume as they can get away with in those downticks, and that creates a huge Voltic at a set price. So actually, when we see that, we start thinking to ourselves, curve trade versus outright, curve trade versus outright. And we can obviously go in and we can analyze whether that might be the case by looking obviously at the elements. We'd already started to see, for example, that this is what I was talking about here. When we started to see that Voltic in that area, I was still short, so I was able to take that Voltic and walk away from my trade at that stage, and I was desperate to get a buy back in. And the curve was obviously dropping, but obviously if somebody's trading the knob spread as a steepener, that's going to create probably a big Voltic on bonds, isn't it? So when you think about it, if somebody's trading a knob steepener into that narrative, there's a very, very good chance, that if somebody's trading a knob steepener into that narrative, and you can see what happened to the knob spread. Do you see it, Paul? It has a massive pop to the upside during that massive Voltic, following the massive Voltic. So somebody's already buying the knob spread steepener, so there should be a massive Voltic trigger coming through the markets to allow us to lean against, because obviously, you know, the bond outrights want the bond, simple. It's a discount to duration, whereas the curve traders want to sell bonds because they're buying tens, because obviously in that case they're trying to create a knob steepener. They're trying to create something that's going to pop to the upside in that red line, and the red line explodes to the upside. So you actually see them doing the trade. Some might argue, but that's the UB contract. Yeah, it doesn't matter. The knob spread might be the knob spread, but it's the same principle for back-end treasuries against the tens. Whether it's the ZB or the UB, makes not a jot of difference. Well, it doesn't mean a reversal. It means if there's a value setting up for a knob spread buy or a knob spread sell, then that means a reversal. Because obviously that's why we're getting the huge, what it does mean is somebody's doing something, just like every Voltic means somebody's doing something. And our job is to go into the markets and try and analyze what it is they're doing. Well, if we look at the 2s 10s and the 5s 10s, it doesn't look like they're doing anything because they're both on an uptick. But obviously there's a big buyer coming in this candle here of the knob spread, isn't there? There's a huge buyer comes in that downtick of the knob spread. So if there's a huge buyer coming in the knob spread during that big down candle, can we see what that buyer's doing? The buyer of a knob spread is going to be selling bonds into lower prices. If they're selling bonds into lower prices and outright traders want that trade, like ourselves, like myself, because I'm closing out my short trade, of course, then of course it's going to result in a huge agreement of price, huge agreement of price. Nobody's inconvenienced by this trade. I'm getting a great price. They're getting a great price for the spreads, and we're both getting a great price. It's not a zero sum in this case because they're different trades, different narratives. So obviously when you see that happening, I want to be busy. I want to be doing the trade, right? I want to be in it to win it at that stage. And obviously the takeaway from that has been pretty good. And obviously as the price explodes, you can start seeing the knob spread starts to sell back off again. And you think to yourself, maybe they're going to do the trade all over again during this phase. You know, when the downtick takes place at 13:40 or thereabouts. And you start looking for another opportunity, but you can see on bonds that it just didn't, there wasn't anything on this 5-minute chart. You'd have to take it down into a 1-minute chart to see what was going on in terms of that trade narrative. But I quite like the shape of it. I quite like the top edge. I would be interested in maybe going again into a higher price to see if there's going to be an opportunity. So just keep an eye on your Voltics again, guys. Do you know what normally happens? Kim will tell you that this normally happens. Everybody watches Voltic and they forget to watch everything else. And then a Voltic comes in and they all sell it. And they go, you told us to sell on a Voltic. Nobody ever said sell on a Voltic. Nobody ever said do that trade. What anybody does is recognize that a Voltic's kicking off and then ask the question, what should I be doing with this information? It's some sort of inside information, and my job is to try and understand what that information is and try and take a trade based on it. Simple as that, guys.